Good morning, ladies and gentlemen. I'm Pelshia, moderator for the conference call. Welcome to ONGC's Q2 FY24 earnings conference call. We have with us today Mrs. Pomila Jaspal, Director Finance, and a team who will interact with investors and analysts to discuss Q2 earnings. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the floor to Madam Pomila Jaspal. Thank you, and over to you, ma'am.
Thank you. Good morning, ladies and gentlemen. Just to introduce, I am Pomila Jaspal, Director Finance, ONGC. I welcome you all in this ONGC earnings call for Q2 and 6 months financial year 23-24. Thank you all for joining us on the call. I am joined here by my colleagues, Mr. K.C. Ramesh, Chief Corporate Finance and Accounts, Mr. Anil Kumar, Chief Commercial, Mr. D. Adhikari, Chief BD and JV, ONGC, Mr. Pawan Agarwal, Chief Corporate Planning, Mr. B.R. Sabudi, Head Finance, Head Corporate Accounts, Mr. Vinod Halan, Head Finance ONGC Videsh Limited, Mr. Mukul Bhatnagar, Head Planning and Strategy, ONGC Videsh Limited, Mr. Prakash Joshi from Investor Relations and Corporate Section, and Mr. Frank from ONGC Videsh Limited, heading the corporate accounts. ONGC has compiled its financial results for the quarter and 6 months ended 30th September 2023, which have been reviewed by the statutory auditors. The financial results released on 10th November 23 through a press note and sent to the stock exchanges. This has also been sent to the analysts who are there on our mailing list. Here is a brief synopsis of the results. The company has earned a net profit, that is profit after tax, of 10,216 crore during the second quarter of financial year 24, as against 12,826 crore during the second quarter of financial year 23, a decrease of 2,610 crore, that is 20.3%. The profit after tax for H1 financial year 24 has decreased by 7,801 crore, that is 27.8%, from profit after tax of 28,032 crores in H1 financial year 23 to 20,231 crores in H1 financial year 24. The decrease in net profit during Q2 financial year 24 and H1 financial year 24 is on account of lower sales revenue, mainly due to lower crude oil and VAP price realizations, then provision of GST on royalty and lower dividend income. The sales revenue for Q2 financial year 24 and H1 financial year 24 has decreased by 3,198 crores, that is 8.4%, by 11,688 crores, that is 14.6%, as against the corresponding quarter and H1 of previous year. The billing, that is net of value-added tax oblique CST for crude during the second quarter of the current fiscal was at $84.84 per barrel, as against $95.50 per barrel in the same period of last year. That is decrease of $10.66 per barrel. The exchange rate of rupee versus dollar stood at 82.66 rupees vis-a-vis 79.81 rupees. per dollar. Thus, realization for crude in rupee terms stood at 7,013 rupees per barrel in Q2 financial year 24, vis-a-vis 7,622 rupees per barrel in Q2 financial year 23, that is decrease of rupees 609 per barrel, that is 8% in INR terms. Similarly, gross billing for crude during the first 6 months of the current fiscal was at $80.56 per barrel as against $101.99 per barrel in the same period of last year. That is decrease of $21.43 per barrel. The exchange rate of rupee versus dollar stood at rupees 82.44 vis-a-vis 78.55. Thus, realization for crude in rupee terms stood at rupees 6,641 per barrel in H124 vis-a-vis rupees 8,011 per barrel in H1 financial year 23, which amounted to an increase of rupees 1370 per barrel in INR terms. The expenditure on statutory levies, that is royalty and excise duty, have decreased during Q2 financial year 24 by rupees 3,841 crore, in H1 financial year 24 by 7,004 crores, that is 27.7%, in comparison with the corresponding similar period of previous year. This decrease in statutory levies is attributable mainly to decrease in sales price of crude oil and levy of special additional excise duty by Government of India on production of petroleum crude at a rate revised on every fortnight based on international crude price. This SAED, in short form, on crude which have been levied with effect from 1st July 2023, which amounted to rupees 6,472 crore in Q2 financial year 23 and rupees 33,352 crores during Q2 financial year 22. There is decrease of rupees 1,478 crores in exploration costs written off in Q2 financial year 24 and rupees 971 crore in H1 financial year 24 vis-a-vis corresponding quarter and half year period of the previous year. This decrease is mainly due to company charging of exploratory wells amounting to rupees 2,140 crore lying in the fields falling under the contract areas offered under Discovered Small Field Rounds, that is DSF Round 3 by DGH, and awarded to the winning bidders during the last year. The operating expenditure has increased by rupees 845 crores, that is 16%, from 5,267 crores in Q2 financial year 23 to 6,112 crores in Q2 financial year 24. The increase is mainly on account of increase in consumption of materials, that is 308 crores, mostly at the Dahej C2, C3 plant, on account of increase in purchase quantity of LNG. Then workover operations, 54 crores, mainly at KG 98/2 block. Repairs and maintenance, that is rupees 44 crores. Power and fuel by rupees 62 crores, mainly at Western onshore assets. Water injection at rupees 89 crores, and transport expenses by 46 crores, mainly at Mumbai offshore due to increase in activity and the corresponding rates. Similarly, the operating expenditure in H1 financial year 24 has also increased by rupees 1,419 crores, that is 13.3%, from 10,661 crores in H1 financial year 23 to 12,080 crores in H1 financial year 24. The increase is mainly on account of increase in consumption of materials, that is by 569 crores, mostly at the Dahej C2, C3 plant on account of increase in purchase quantity of LNG, then contract payment that by 185 crore, mainly at KG 98/2 block, then repairs and maintenance by rupees 222 crores, then power and fuel by rupees 78 crores, mainly at Western onshore assets, then water injection by rupees 129 crores, and transport expense by 34 crores, mainly at Mumbai offshore due to increase in activity and the rates. Depreciation, depletion and impairment costs, that is DD and I cost for Q2 financial year 24 and H1 financial year 24 stood at 4,715 crores and rupees 9,706 crore as against 2,595 crore in Q2 financial year 23 and 7,105 crore during the corresponding period of the previous year. This increase is due to reversal of impairment last year on certain discovered small fields of the company falling under 10 contract areas which were awarded by DGH to the winning bidders. The company at a consolidated level has earned a net profit, that is profit after tax, of 16,553 crore during the second quarter of financial year 24 as against 6,830 crores during the second quarter of financial year 23. That is an increase of 9,723 crores, that is 142.36%. Similarly, the company at a consolidated level has earned a net profit, that is profit after tax, of 33,936 crore during H1 financial year 24 as against 15,411 crore during H1 financial year 23, that is increase of 18,525 crore, that is 120 by 21%. This increase in profit can be mainly attributed to our subsidiary, that is HPCL, MRPL and OVL. You will be happy to note that board has approved interim dividend of 115%, that is 5.75 rupees on each equity share of rupees 5. The total payout on this account will be 7,234 crores. Well friends, with this I finish my briefing of the second quarter results for the financial year 23-24. We will be very happy to take questions from you. We will request you to restrict your queries on financial results only. Thank you.
Thank you, ma'am. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Sabri Asarika from MK Global. Please go ahead.
Yeah, good morning, ma'am. And I have two questions. The first one is relating to KG 98/2. So I think there's a news just a couple of days before where Director Production has stated that the asset is almost ready and first oil should be expected soon. So just wanted to know any particular date or when we are expecting the production of oil to commence, and whether the target for gas ramp up to 89 MMSCMD by May-June 2024 is that is also final?
I think Mr. Pawan Agarwal, he is our Chief Corporate Planning, so he will answer this query. Mr. Pawan.
I think good morning all. With respect to KG 98/2, you are very right that the oil production first oil from the 98/2 is expected very shortly. The pre-commissioning activities are already ongoing in full swing, and we expect the first oil to be there in this month itself. Further, with respect to the ramping up of the gas production, still we have got the plan for the installation of the process platforms in April, and so that we should be able to increase our gas production from the field by May-June 2024.
Okay, sir. And just a follow-up, this oil production from KG, is it like...
your side, I think you should mute, there is some sound. We can't... Echoing. Some echo sound.
Right. Yeah. Is it clear now?
Yeah, it's clear now. Okay.
Yeah. And secondly, I just wanted to know if the windfall tax will be applicable in this 98/2 or being NELP, it is out of the windfall tax regime.
In the NELP block, there is no windfall tax.
Okay, so you will get the current market price in this block, whatever is prevailing, without any SAED in this, right? Okay, sir.
I'll revert back.
Just we'll confirm and come back to you, Sabri, for this.
Okay, sir. Yeah, and second question is regarding this premium gas pricing for new wells. So, is there any update on the same with respect to the modalities being finalized by the DGH committee?
I think that 20% premium is applicable on the new gas from the gas from the new well and the well intervention in the nominated fields.
Right. I'm talking about that only. So there was some, I mean, it was supposed to happen in 6 months from the date it was announced. So by now, I think, is there any update on the same? I think
the policies, some, communication will be coming soon, and some policy will be made in this regard, but the DGH has already submitted its report to the ministry. So they will be coming up now with this final guidelines on this. But as already stated by Mr. Pawan, the 20% increment is there on the gas from the nominated field, and that 20% is applicable for the domestic price, from the Indian basket, for the on Indian basket price.
Got it. So you are saying right now the DGS has already submitted a report and it is with the ministry for consideration. Is that right?
Yeah. Yes. That's what it is, our understanding.
Okay, ma'am. Thank you so much and all the best.
Thank you. Next question comes from Abhishek Nigam from Motilal Oswal. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. First, if you can, just reiterate the production targets for 24 and 25 for oil and gas, for ONGC and OVL. That will be very helpful.
I think with respect to the ONGC production, the ONGC standalone production in the last financial year of 22-23 was 40.21 MMTOE. And during this current financial year, we expect to maintain that number or slightly increase the numbers by around 1%. And moving forward to the next year, hope to increase our production by 4 to 5% over the numbers of 23-24.
Okay. 25% over FY23.
5% over FY24. 20%.
Okay. Oh, okay. And so OVL, if you can just, repeat.
Yeah, for ONGC we did for FY24, our production target is 10.68, which is 5% up as compared to 22-23. And for 24-25, our target is 11, and the next year is 11.22, oil plus OE.
Okay, thank you so much. And second question, if you can just give us, the CapEx guidance for 24 and 25.
CapEx guidance. So you see, actually it stays in the range of 30,000 or so, but in the current year we expect to increase it by 10% for the current year and the next year.
Okay. Thank you so much. I'll come back in the queue.
Thank you.
Thank you. Next question comes from Ketan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for giving this opportunity. Couple of follow-up questions. In terms of the KG 98/2, would you be able to share our production targets for oil and gas separately for FY25?
Pawanji. Mr. Pawan is answering your query.
For the FY25, we will be starting the financial year. When we start the first time, we will be starting with 10,000 barrels, which will be gradually ramping up to 45,000 barrels sometime in 24-25. And we will be also increasing our gas production to around 10 million cubic meter per day in the next financial year. So in terms of the oil and gas, we hope to increase achieve the production numbers of around 1.5 MMT for oil and around 2 million cubic meter for gas.
This is for FY25, correct?
That's right.
Thank you. Just one more follow-up on the 20% premium for the gas field. So how is the mechanism envisaged? Would it be on the any incremental production that we do out of nominated fields, or would it allow for sort of adjustment of the decline rate and then sort of look at the incremental production?
Let's wait for the policy.
Let's wait for, but I think what you mentioned is right. It will be incremental production will be for the new well intervention only. For the new wells, it will be whatever the gas production is there, that will be accounted for. And for the well intervention, it will be the incremental over the after accounting for the decline rate. It shall be that way. But let's see how the policy comes through.
Right, sir. Just one more question on the exploration targets for the second half of the year. Which are the key wells that we are targeting during the second half?
Well,
we have got our exploration ongoing in the Mahanadi Basin. We have got our focus areas in the western offshore. And we have also got a focus on this Assam-Arakan Basin. Then few of the exploratory wells are also planned in the Bengal and the Vindhyan Basin, where these new basins have been added.
Sure, sir. Thank you.
Thank you. Next question comes
from... Before madam you go for a question, we just wanted to clarify the SAD is applicable on nil block also. Hello, carry on, ma'am.
Okay, sir. Thank you. Next question comes from S. Ramesh from Nirmal Bang Equities. Please go ahead.
Good morning and thank you very much. Can you hear me?
Yeah, you're audible.
Yes.
Yeah. So, if I may just, dwell on the KG gas and this incremental gas price, what is the current capex incurred as on date, and what will be the final capex on KG gas? And when do you expect KG gas operation to generate positive EBITDA? Will it be from FY25 itself, or will it take 1 or 2 years?
Mr. Ramesh,
yeah, we have already, as you know, substantial part of the KG investment we have whatever that we have committed, we have already done. So around 26,000 crores is what we have already spent on this. So the balance amount actually various the project finalizations are under focus now. So once it is done, as you know, it is around 5 billion is what the total project cost is. So the balance part is yet to be finalized, but maybe another...
by next year, basically,
we will get the exact number.
Yeah. This is milestone-based payments, and in the current year, for the rest part of the year, and in next year, the entire payment will be made as per the milestone.
So it will be completed by 24-25.
Okay. So in terms of the contribution from KG to your P&L, when do you expect to see that happen?
P&L.
To P&L. Okay. So as sir told, the peak oil and peak gas is expected in 2025.
But oil production is already planned to be started like by end of this month, as Mr. Pawan was saying. So the production numbers will start from November, and the revenue stream will start in the beginning, and then it will peak in the next year.
Okay. The next couple of thoughts is when you talk about the 20% premium on gas prices from the nomination blocks, do you expect some benefit from that in the second half, or say in FY25 based on your current production plan in terms of the well intervention or additional wells being drilled? What is the thought process there?
I think we are just waiting for the policy to come in. Since the launch of this new gas pricing policy on 6th April 2023, we have already accumulated the gas from the new wells and the well intervention. And by the end of this financial year, we shall be having around 2 million cubic meter per day of the gas from this category. So we are just waiting for the policy to come.
Okay. So on OPaL, there are two things. One is, what is the first half result in terms of revenue and profit? And there are some news that ONGC is going to increase its equity stake from 49% to 95%. What is the status of that? And how do you see the OPaL operations progress in the coming quarters?
So I think Mr. Adhikari, he is our chief BDJV, so he will be answering this query. Mr. Adhikari.
Hi, thank you for your query. OPaL is having some distorted capital structure, so ONGC is trying to correct it. So in that regard, Ministry had advised expert committee to be constituted. As per the advice of that expert committee, which is headed by a former Secretary of Government of India, our board has submitted some recommendation, which is there in the media or in the stock exchange. They have submitted about 18,365 crore additional investment has to be done to correct its capital structure. We are also approaching the government for allowing us to use our new gas, that is the gas from the new wells and from the well interventions, for the use of this replenishment gas. So that amount, as Mr. Agarwal has already said, that will be about 2 MMSCMD by the end of this year. So we are requesting MOPNG to consider our plea that if they allow us to inject this, utilize this new gas for OPaL plant as an exception, because this plant is, strategically very important for the state of Gujarat as well as the country, because it has already, generated about employment in that area or more than about 2 lakh of workers. And it has attracted investment in that Gujarat PCPI region, Dahej PCPI region, about 1 lakh crore. So strategically, it is ONGC is trying to, infuse some capital so that it becomes sustainable. So in this current year, OPaL is not expected to make any profit. Its EBITDA, its PAT will be definitely negative. Even EBITDA will also be negative, expected to be negative. But however, once this approval comes to the government, that is cabinet, because this talks about an infusion of more than 5,000 crore of Maharatna power. So OPaL will be turned around and it will be made profitable by FY25.
So when you talk about turning it around, is it based on the current spreads in the petrochemical industry, or are you expecting any improvement in the petrochemical spreads?
The current, for the last 6 months, the price has been extremely depressed, and this trend is expected to continue for another 6 months or so. We have factored in that price, and even we have factored in a little bit of upcycle from 25 onwards. So till that time, till I think mid of 25, this depressed petrochemical product cycle is expected to continue. So that has been factored into this financial model.
Thank you very much, and wish you all the best. Happy Diwali to all of you, and I'll come back with you.
And just one thing I would like to add is that although our share will be increasing to 96%, but we are proposing this that in the period of once it gets turned over, and we will like to have our strategic partner in this.
Yes.
And again we will come back.
We'll retain the JV characteristics of OPaL very soon.
Okay, thanks a lot. Appreciate that.
Right.
Thank you. Next question comes from Vishnu Kumar from Avendus Spark. Please go ahead.
Thanks for your time. So just wanted to understand the production you mentioned for the 25 incremental will be 1.5 million ton of oil and 2 BCM from gas for 25.
Yeah, that's right.
Additional.
And this incremental, mostly it is, I'm assuming it's only kg with some reduction in the base field. So how should this appear, let's say in 26? When you also mentioned that the kg only FY20.
Yeah, in the FY26 also we anticipate to maintain the same numbers. These are total
so the decline curve from kg is not very steep. It is going to be very normal only. Or rather, how much should we expect a decline curve for this new kg once it starts producing? And since you mentioned only calendar.
I think let the well start producing, because whatever you do earlier, it's only a model. But let the well start producing, let us see its performance, then we can work out on its decline curve analysis and the future prediction.
But it's not a very fast decline like a 30-40% dip the year 2 or year 3. It is just going to be very nominal.
No, 30%, 40% decline rate is not there. We do not hope that those numbers. It may be the conventional numbers what we are hoping, and which has been modelled. But let us wait and watch once our wells are put on production.
Understood. And secondly, just to understand the netback of the new project, one you mentioned the realization will be capped at 75. It's also part of this SAD, and hence your realization will be around capped at 75. Is that right?
You see, that is the question, because if you see the recent trend, every 15 days government has come out with this SAD, when we have seen as a realization something around $75 to $77. And this is for net block also.
Okay, got it. And how should we look at the net back on a per barrel basis? Or rather, if you could just help us understand the statutory levies that will be coming from for this production. Is it very different from the old, or how should we look at it in terms of cess, in terms of the royalty rates, or just to explain the statutory levies on this?
For ELP block, the
SAD?
Royalty cess rates basically.
See for NEL block, as far as crude production is concerned, royalty rate is, if it is offshore, then it is 10%. For onshore, it is 12.5%, but this block, I think 98/2, we are talking about 98/2. So it's located
this is at 5, half.
It is 10%. But if it is depth is more than 400 meters of water depth, then it is 5%, half percent, 50%.
So in that case,
for 7 years.
For 7 years, it will be half, and then it will be restored to 10%.
Yeah,
and there is no sale. There is no sale in NEL block.
Understood. So basically, your royalty rate is only be 5% for the first 7 years.
Yes.
And for gas also, it will be the same, or will be different?
Royalty rate is 10% for gas also.
And same half.
Same 50% for first 7 years.
So technically, for both the oil and gas production, realization will only pay 5%. That's the only statutory levy that we have to pay. And on a per barrel OPEX, is it going to be materially higher versus your current existing production?
OPEX.
Yeah, this being offshore, obviously the cost of production would be much higher being deep water as compared to the onshore or the shallow water in the western offshore. So obviously it is going to be a little more.
Any rough?
Grams of the cost of production will come down.
Because of volume, it will be less.
when the production ramps
Yeah,
up.
obviously, the per unit cost would also depend upon the volume. So if depending upon what volume that we get from there, this would be further down.
It will
The
get
steady state, how much? So steady state, once we reach the desired numbers, what will be the per barrel costing for OpEx?
So you see the majority of the cost would be for this FPSO.
Oh.
Yes.
That's about 7 lakhs dollar per day is the operating cost, 7 lakhs plus. That is 6 lakh 9,000 plus GST of 18%. So that would be the substantial part of the OpEx as far as the 98/2 is concerned.
Okay. Got it. Secondly, on the projects that, I mean, in the past, I think 6 months ago, there were a lot of news articles stating that you would be tying up with some international companies for further exploration and developmental activities. Just to understand, like, after many years, we brought KG-D6. Do we have a pipeline of many such projects so that we can at some point, I mean, we are probably going to reverse our production next year, decline. So do we have a series of projects that can keep coming over the next couple of years where we might see the production decline curve probably leading to a growth over the next 3-4 years? Steadily over the next meaningful time frame.
I think there were a number of projects which are in pipeline, and I think 9 to 10 projects worth around 25,000 crores are under the tendering process, and which will be awarded shortly within this financial year, and they will be under construction during the next financial year, and we will be taking a few wells for the drilling under the development plan. Like I can just mention that Mumbai High Redevelopment Phase 5 is under tendering. Daman Upside Development Project is under tendering. Additional development of North Tapti, development of Cluster 9, the redevelopment of Lynch Field in Mehsana, Polymer UR project in Becharaji, Mehsana, the development of WO16 cluster that is already going to be completed during this financial year. So there are the number of projects are there which are already under tendering. Many are under the conceptualization and will be coming under for the tendering during this by the end of this financial year. So that's the hope that we have got from these projects, which will be not only able to arrest but also reverse the declining trend of the production.
I'll put the question differently, sir. So we are doing about 21.5 MMT of, production of crude. And let's say if we add the another 1.5 which you're mentioning, 25 will hit 23. If we go back probably 17, 18, 19, we were doing 25 million ton of oil. So if we take up all these projects gradually over the next 2, 3, 4 years, can we go back to 25 million ton of production, or that will be too ambitious?
No, you say what you are saying is Dil Mange More. So that obviously is our aspiration to achieve those numbers of around 25 MMT of oil, which currently we are producing something around 20, and with the 98/2 will be touching something around 22 the next financial year. And let's hope how that well behaves, and because we have got a stress on the exploratory activities, and we hope some new good discoveries comes on the way, and after this release of the no-go area by the Government of India, around 1 million square kilometer has been released, of which around 0.2 million square kilometer may be coming under the OLP bid round 9. So where we are bidding aggressively. And we also have a great hope from those areas. So let's see how this comes through, how the exploratory activities goes on, and inshallah if we get some good success, we should be able to touch 25 MT in the near future.
Got it. And just finally on the capex, you mentioned that against the 35,000 crore range, we'll have a 10% increase in from the current numbers. Is that right?
No, the current number are 30. It would be something between 33 to 35.
33 to 35.
35,000 crores. We were talking about possibility of a $1 billion plus in terms of renewable investments. At present, that is unlikely to happen. Is that right? At least foreseeably next FY25 also, we will not include that in the capex.
I think recently in news there was one PTC which PTT energy? I think
so renewables actually we are targeting 1 lakh crores by 2030. Mr. Adhikari can supplement this investment with respect to renewables.
Yes, in renewables and new energy front, we are working very seriously, keeping our vision of achieving carbon neutral in scope 1 and scope 2 by 2038, and also to create a significant or good amount of renewable energy portfolio by 2030. Our target is to create a portfolio of about 10 gigawatt by 2030. Recently we have attempted to acquire one company, that is PTC Energy Limited, that we have been selected as the H1. Now the process is still on and it is not finalized as of yet. We are also trying to we are also exploring few other merger and acquisition prospects or projects. Keeping this target of achieving 10 gigawatt by 2030. So far our this PTE Energy Limited, which is having a portfolio of 288 megawatt, is expected to be added in our kitty by end of this year.
What will be the investment, sir, in this?
Here we have its investment will be to the tune of 900 crores plus.
Okay. Got it, sir. Thank you.
Thank you. Thank you, Vishnu.
Thank you. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. Next question comes from Hardik Solanki from Nuvama. Please go ahead.
Hello.
Hello, Hardik.
Yeah, so just want to understand the OPL production for the half year. If you look at the productions are much higher, and if you look at the sales, sale is down. So what would be the reason for that?
In the case of OVL, as far as the production is concerned, it's targeted 5% higher as compared to 22-23. 22-23 actuals were 10.17, and this year our target is 10.68. Yes, you are correct that the sales volume is down. That is mainly because of the Sakhalin, which we are waiting to get on board the project. The Sakhalin sales is not in the...
Just hold on. Yeah.
So that is explained. Actually, Sakhalin volumes are not included in the sales quantity. And in non-furnished.
Okay. Okay, and just want to understand on the windfall tax. During the quarter, the windfall tax was much higher. So, just want to understand, is there any adjustment towards the inventory or some other reason to it?
Yeah, there is, in the valuation of the inventory also, we do make the adjustment with respect to the windfall tax. So, that is the reason. Otherwise, if you see compared to last year, Q2, the windfall tax is much lower. Last year was much higher when we started with almost, around $38 per barrel. That was 23,250 odd to begin with. Now it is much less, but because of the higher inventory and valuation there, it is more.
Sure. That's helpful. Thanks.
Thank you. Next question comes from Sumit Rohra from Helios Capital. Please go ahead.
Hi, sir. Very good morning to you. Very good afternoon. Firstly, I would like to, wish you and your team a very, very happy Diwali. And thank you, madam. Thank you so much. Okay, so ma'am, I will not touch upon a few things because I've, but just if I can understand correctly, the production decline which, we were basically facing over the last couple of years has now ended, and now basically we are on a growth path on the production of oil and gas on a combined basis. Is my understanding correct now, ma'am?
Perfectly correct. Perfectly correct.
Okay. Ma'am, now to basically just touch upon this point as an investor, you guys have done a wonderful job, so many congratulations on that. But ma'am, just one thing, I would like to bring to your and your team's attention is that, ma'am, today there is a complete disconnect between, valuations, because today ONGC is the cheapest company globally in the E&P space. Okay. And today, if you look at it broadly, without getting into exact numbers, our market cap is about 2.5 lakh crore. Right. And you have done a profit of about 32,000 crore on a 6-month basis. So, in terms of, numbers, there is clearly a gross undervaluation in market cap of ONGC, because our book value also is about 250 rupees a share. So, ma'am, why don't the board, now, consider, going in for aggressive buyback, where the government of India does not participate and, effectively increases, its stake. Because, we are trading even in this environment, at a 3-4 PE valuation, and, we are 20% below book value, so we can actually, build, investor wealth, and ultimately it benefits the government of India only, right? Because, today if you go to see our group company, HPCL as well, we bought into it at 480 rupees a share, and, today their performance also has been exemplary, wherein, their performance has also doubled in terms of physical performance and financials. So, as a group today, we have so much of value on the table which we can build. So, ma'am, I really would humbly request, if you can consider a buyback, not only for you, but also for the entire group, right? Because there is clear value on the table for the investors, ma'am.
See, our subsidiaries, so they are investing, and that is making an impact on our financials also. And you might have seen that the consolidated profit also, you will be happy to note that there has been quite a jump in the consolidated profits. So as regards the buyback is concerned, because this is not the stage, there are so many other options are there, and the government is considering certain few other options also. So it is not necessary that buyback is the only option. So it is not ruled out also. So we will have to wait and watch. And as regards our pricing is concerned, so you will also understand the price is picking up. It is not the cheapest company. Today the price has crossed the 200, and there is an increase of almost 40% if you consider the time this price was in November last year. Yeah.
That, madam, we clearly appreciate. But I'm just saying purely on valuation matrix, you are trading at sub 4 PE. So, in terms of, because ultimately a company is always valued on its earnings potential, right? So your earnings is growing. So I'm just highlighting that, you have done a wonderful job. You are doing a wonderful job, but, the market should also, realize that, and, you should get your due credit, right? So that's the only point I'm trying to say, ma'am.
Yeah, see, you know that we have been a very good dividend paying company, and we have been paying extremely good dividend for past many years. Now, in the given, circumstances, as ma'am was saying, that we need to take a considered call, considering all aspects, whether to go for a buyback or whether, the investment that we are going to make further in subsidiaries or other than, the core business. So, we need to take a call based on the cash flow that we have currently having, and it's a call we have to take, how much we need to borrow and what kind of situation we want to be in later. So, it's not that, currently buyback is the only option.
Sure, understand that. Thank you so much, and wish you all the best for a wonderful future, sir. Thank you, ma'am.
Thank you, Sumit ji. Thank you.
Thank you. We have a follow-up question from Abhishek Nigam from Motilal Oswal. Please go ahead.
Yeah, hi, thank you so much for the opportunity again. So my question is regarding the Russian assets. So, they've been in transition, and you are currently not reporting production and profits from those assets in your financials. Is there any visibility on when the situation will get resolved and those assets formally again get transferred to you?
In case of Russia, we have 3 assets, and we are reporting production for all the assets, Imperial, Vankor, and Sakhalin. And as far as Sakhalin is concerned, we are very aggressively actually going ahead, and hope to very soon get the shares allotted in our name. Last week only we have made an application to the Russian Federation to consider receiving the abandonment funds in the ruble currency. So we hope to get a decision very soon on that. We have also concurrently approached the CIBL, asked CIBL to approach the Central Bank Russia to accept to tell us that there are no constraints in actually borrowing in rubles, because the abandonment funds which we actually secured back from the JP Morgan, those are in USD and are not available actually to be sent for meeting the abandonment fund obligations. So we hope to very soon we are very aggressive in this now, and we expect this to be closed very soon.
Okay. So that's very useful. And second question is, my understanding is that the operating profit from those assets you are just putting into a fund and it is not part of your regular OVL financials. So is it possible to let us know how much accumulated EBIT is there in that fund?
I think you are talking about the Vancouver dividends which we have received due to the unfriendly jurisdiction Singapore with Russia. We have not been able to repatriate the dividends which we received in Russia, and they are lying there. So the dividend is around 16 billion rubles, which are locked up in Russia. But we are trying to now actually use this money to meet the abandonment obligations in case of the other project, the Sakhalin.
Okay, that's it. Thank you so much.
Thank you. Next question comes from Iqbal Khan from Nuvama. Please go ahead.
Yeah, hi. Sir, I just wanted to ask a question on the windfall tax. Just correct me if I heard it right or wrong. You mentioned that the windfall tax in this quarter was 6,472 crores?
Bangkok.
No. Windfall tax.
Hello?
Yeah, we are just letting you know.
So your question was, what was the windfall tax amount?
Yeah, the windfall tax in this quarter.
Okay.
No, it was 3,352 crores in Q2 24.
So, was there any inventory adjustment in this? I mean, if yes, then how does it, I mean, to what extent was the adjustment done? If you could consider it in USD per barrel.
Yeah, what we do is normally when we value our crude inventory, we also consider the cess part. So this is the windfall part is also under the excise. So we do add this into the inventory. So current quarter there's an increase in inventory, so we have added this. In terms of the provision for inventory, it is 930 crores. So what exactly you want to know further? Like it is.
Yeah, I mean, just wanted to know in USD per barrel, how would you translate this? The realization.
So you see around 3,000 crore was the outflow what has been shown. Okay, out of the 930 crore, if you just subtract, so 2,144 crore, and if you divide, it comes to around 8.23 barrels.
$8.23 per barrel.
Okay, understood. Thank you.
So that was the rate what was prevailing, if you see.
Should I explain?
Right.
Yeah.
Understood.
You see the windfall tax comes under excise law. So the product, YD says, SAD, Special Additional Excise Duty, is payable only at time of removal. So suppose in the month of September, some crude is produced, and suppose the price is say $16 per barrel windfall tax, but the crude is removed in month of October, where the price is windfall tax rate is $10 per barrel. So only payment will be made at per $10 per barrel, not at $16. So this is only accounting entry, but actual payment will be based on the rate prevailing at time of removal. So these are only accounting statements.
Understood, sir. Thank you, sir. Thank you for this.
Thank you. Next question comes from Ashwin Balasubramanian from HSBC Mutual Funds. Please go ahead.
Yeah. Hi. Thanks. My question relates to OPaL, your subsidiary. So I had a couple of queries. with regard to that. So first is, you mentioned that right now the stake would go to 96%, but later you may bring in a strategic partner. But is there also the possibility that you are evaluating to maybe make it a wholly owned subsidiary or sort of merge it with ONGC itself? I mean, like in the past, we've seen for OMPL, for example, it's amalgamated with MRPL, and similarly, MRPL also, is although it's publicly listed, it's majority owned by ONGC. So, I mean, is the thought process there to keep the majority ownership of ONGC, or what's the thought process then in terms of strategic partner? If you're bringing, like, what kind of strategic partner would you be looking at? So that was one question. The other question was in terms of the capex plans. So there were some news reports that in terms of the petchem business, ONGC through its subsidiaries is planning to invest quite a sizable amount in the next few years. So what's the plan in terms of OPaL, in terms of capex, sort of going forward? If you can give some color on that. And also this approval for the equity infusion, when do you expect that to happen?
Okay. This is D. Adhikari. Three questions you have raised. One is the OPaL strategic partner. Second is capex plan for in next few years in petchem and downstream business. Third is approval process for OPaL. Right. So first question, that is our strategic plan for OPaL for infusing a new partner is like this. Because this petchem industry is basically, the agility or flexibility is most important thing, which is that is addressed better when it is a JV instead of a public sector subsidiary. So for its revival or to make it sustainable, ONGC had to step in because the other two promoters, GAIL or GSPC, did not contribute much in the past. So now, considering the little bit distressed financial conditions, ONGC is proposing to infuse an equity of about 18,000 crores, 18,365 precisely. So that will make ONGC's shareholding to about 96% plus. So this will become a subsidiary for the time being. But our objective is not to convert OPaL a subsidiary, neither to merge with ONGC. At least for the next 3 years, by 3 years, we will try to infuse an equity investor once it is turned around. We are expecting that by 2025, FY25, this will be turned around after infusion of this capital and ensuring a sustainable feed, gaseous feedstock for OPaL. After that, by 27, FY27, we will try to infuse a new equity partner. So that exercise will start after it is turned around, say after 25. So this is this plan, and we would like to bring down ONGC's equity holding to 50%, so that it remains a joint venture of ONGC only, not a subsidiary. This is one. Second question is capex plan for in the downstream and petrochemicals. Yes, considering the waning demand on the motor spirit or fuel, we are focusing on increasing interest in oil to chemical kind of business, or even refinery cum petrochemical business. In that regard, we are exploring two large projects, one in two different states of the country. It would not be prudent to disclose immediately. Yeah. But yes, we have a plan of investing about 1 lakh crores projects, more than 1 lakh crores in two projects by 2028 or 2030. So this is the plan, and our petrochemical production as of today is through OPaL and MRPL. OPaL is definitely a flagship petrochemical project for ONGC, and we are trying to take our current petrochemical portfolio of, say, about 3 million to at least about 8.5 to 9 million ton per annum by 2030. This is our vision in petrochemical and downstream front. And
This will be on collaborative mode.
Yes. And as far as approval for infusing the equity in OPaL is concerned, yes, our board has given the approval. Based on that approval, we are approaching the Ministry of Petroleum so that they can take up this request or board approval to the appropriate authority like Cabinet Committee of Economic Affairs for expeditious approval of this process. Approval for infusing additional equity to make OPaL a subsidiary temporarily, and also requesting Cabinet to allow ONGC to use its new gas, that is the gas from new wells or the well interventions for the petrochemical business, only limited to the amount of the feedstock of OPaL. Is it okay?
Yeah, thanks. Thanks a lot for those responses. Just one follow-up. In terms of the CapEx which you mentioned in the petchem, so would a large part be done through OPaL or
no?
Is it?
They are separate projects. Two separate petrochemicals projects we are exploring. It's not through OPaL.
Okay. Thank you. Thank you so much.
And it will be on collaborative mode. It will be kind of a joint venture or that kind of arrangement could be there. So we will be funding our shares.
Yes.
Okay. Thank you so much.
Thank you. Next question comes from Varadarajan Shivashankaran from Antique Stock Broking Limited. Please go ahead.
Thanks for the opportunity. So you mentioned about the capex numbers. I am still a little confused about the things which are going down at the top. One is about your petrochemical OPaL investment. So whatever that 30,000 crore, 33 to 35, does it include that OPaL investment or that doesn't?
No, it does not include the OPaL investment.
That is only currently which is in table basically, not the 17,000, 18,000 crore which is yet to be approved.
Fair enough. Secondly, after the KG Basin completion by April, May next year, that development expenditure intensity should actually come down. I know that you have a lot of projects on hand in the pipeline, but they are yet to be approved or tendered out. So is it a fair assumption that FY25, especially at least 1 year, your development capex would actually come down?
No, we will be able to maintain our, our financial position is quite robust, and even after making this capital infusion, once it is approved by the CCA and some new investment which we are talking about, so we have the capacity to generate profits also, and definitely we will be able to maintain the desired, dividend levels.
No, the development expenditure which you are talking about, that we have been maintaining around 30,000 crores over the period of last 5 years. So that as far as the Western Offshore Front is concerned, the expenditure, as Mr. Pawan Agrawal was earlier explaining, there are projects which are under various stages of approval. So that capex part in development would more or less continue to be the same. Of course, as far as the core E&P is concerned, the focus is now getting a little more. We are planning to spend on the exploration part more so because of the government has released the no-go areas also now. So around 30,000 crores is what we are planning in the next 3 years, 10,000 odd crores in exploration, which is some increase. But yes, if you exclude the petchem and other projects which are subject to approval, the development expenditure would continue to be more or less on the same level on the core E&P sector.
Fair enough, sir. Thanks. One last question on the international asset, specifically on Venezuela and Mozambique. If you have any update, Venezuela, especially given the lifting of the sanctions, is there any thought process on further investment as well as the dividend outflow? And in terms of Mozambique, if you have any updates.
On the Venezuela, the sanctions have been lifted on 19th October, and for a period of 6 months until, say, first week of April 24. And we have a team on the ground which is in consultation with PDVSA to actually secure the crude allocations, which will actually facilitate the realization of the pending dividends. And we are also in the talks with the banks in Venezuela to see how the funds remittances can take place. As of now, there are no further investment plans as far as Venezuela is concerned. And regarding the other project you spoke, Mozambique, this project is maybe this year, end of this year, or January 24, we are expecting a restart. Because the security situation has considerably improved in the project area, and already 2,000 feet are on the ground. Emergency work has been resumed. So there is an early start going to happen in January 24. Anything else?
Thank you, brother.
Thank you. Next question comes from Roshni Devi from Argus Group. Please go ahead.
Yeah, hello, sir.
Yeah, hi,
Hello.
please go ahead. Yeah.
Please go ahead.
Yeah. Regarding the Panna Mukta oil fields, how has the production been there so far, and what is the outlook on it?
Panna Mukta.
I think Panna Mukta is producing very consistently, something around 7,000 to 8,000 barrels per day. And we hope that we will be maintaining the same rate in the near future.
Okay, thank you, sir.
Thank you. There are no further questions. Now I hand over the floor to Mr. K.C. Ramesh, Executive Director and Chief Corporate Finance, for closing comments.
Yeah, thank you, ma'am. We thank all the analysts and investors for being part of this call today. I think the outlook, as ma'am was explaining in the beginning itself, like, it's pretty good now with, the assured prices that we have for oil, particularly so in case of gas, for the gas well intervention and the new wells, which we are going to get 20% more. And with the KG 98/2 on the horizon, we are expecting that the core revenue which we have from the E&P would continue to be more if we are getting the price that the government has assured for gas. And further with the new investments in other areas like petchem and other areas, what Mr. Adhikari was explaining. So the overall outlook looks pretty good, and with your support, we keep continuing to perform well. So thank you once again. Thank you all for being part of this call today.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a good day.